It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back again with Colin Stewart. He's Chief Executive Officer and Portfolio Manager at J.C. Clark, to talk about, Colin, something that's on the mind of a lot of Canadians and a lot of investors, and something that has economic consequences in a big way: population growth in Canada. How do investors get properly positioned? Yeah, well, a couple of things. I mean, last year in 2023, we saw the highest population growth, 3.2% in Canada in 50, 60 years. So it's really remarkable what we're seeing, and that's largely been driven by immigration and then temporary workers as well. So, as investors, we've tried to think about how can we benefit for this, what companies are going to do well. And I think, one of the key things is real estate. People who are coming to Canada need a place to live. There's a huge push recently we've seen by the federal government to build, millions of new homes by 2031. I think 3.87 million new homes is the goal, to have those built. And there are many different programs in place to drive that. So, a couple of companies that we think are well positioned. One is InterRent. It's a owner of apartment buildings in Canada, with a portfolio largely based in Ontario and Quebec. A lot of these in-place rents are lower than the market rents, so when units turn over, they're able to increase those rental rates. Sometimes the uplift is as much as 20 or 25%. They just reported a very strong quarter of 11.7% same property net operating income growth, so strong results, well managed. So we think that's one interesting way to play the trend. And another company called Dream, which is really a diversified real estate company run by a fellow named Michael Cooper, been around for a long time. It's a well-managed business. They, increasingly are focused on recurring income from multifamily industrial properties and asset management, but they also have this very valuable, very large, one of the largest land portfolios in Western Canada. So huge tracts of land in Saskatchewan and Alberta, which we believe are very desirable places to live. Obviously, lower cost of living, a lot of job growth. And I think as immigrants come to Canada and looking for more affordable places to live than perhaps Toronto or Montreal, I think Western Canada is going to benefit from that. And a company like Dream is very well positioned to develop that land, sell it to home builders. And in addition to that, it trades at a very large 55–60% discount to its net asset value. And when you're talking about Dream, you've got to be very careful to distinguish between Dream Unlimited, which is residential real estate, and Dream Office, which is another REIT, which holds office real estate, where the fundamentals are perhaps quite different. Yeah, and it's one of the subsidiary companies, and I think Dream owns a very small amount of units in Dream Office, and they were behind starting it. But really, we very much favor the Dream, the parent company that has, as you said, residential exposure, will benefit from immigration and housing trends, and would be a little bit cautious in office right now. There are other real estate investment trust REITs that specialize in apartment real estate. Boardwalk is one. Yep. CapREIT is another. Why do you favor these two? Yeah. I mean, I think they're both excellent companies as well, and probably they're all going to benefit, frankly. But InterRent is a company we know fairly well. We like the faster growth perhaps of InterRent relative to the other players. It's a little bit smaller than a CapREIT, for example, something that's got more growth opportunities. We like the fact that they're in key cities like Ottawa, Montreal, Toronto, where we think a lot of population growth is going to occur, and a lot of people come because that's where the jobs are. So I think they're well positioned, as I said, to benefit from these trends. Okay, let's go to another thing that's on your mind. India, a remarkable story of population and economic growth. And I think a lot of investors are wondering, how can I safely invest in India? Because there are pitfalls there. Well, for sure. I think anytime investing in sort of a developing market or foreign country, a lot of risks. And if you don't understand the nuances of how the stock market works or businesses. So, we certainly think that the overall macro story in India is very, very powerful. It's going to be the third largest country by 2027. They're the largest democracy in the world. I have almost 1 billion voters. There's an ongoing election underway right now, which I think is going to be decided on June 4th or 5th. And it's very likely that Prime Minister Modi is going to be reelected with a majority, as he was before. And his policies have been very, very positive and powerful, bringing capitalism and pro-growth policies to such a large economy. I think India is also benefiting from this sort of move away from corporations to move their manufacturing away from China to some degree. So the way we think investors can play this is Fairfax India. Obviously, everyone knows Fairfax Financial. Very astute investors. This is a subsidiary company that they own 43% of, but have voting control. And it is basically an investing holding company that owns about 3.5
$3.6 billion of public and private investments in the Indian market. And I think, one of the key investments is a 64% stake in the Bangalore International Airport. So they're involved in infrastructure. And we think there's just going to be huge continued growth there. Fairfax India trades at a 30% discount to its book value per share. So not only is it traded on the TSX, safe, trades at a discount, you've got a very well-regarded, well-connected management team with people on the ground in India that are managing this and making investments on your behalf. So overall, we think it's a great way for Canadian investors to get exposure to the Indian growth story.
Let's call